Now, let's talk about a subject that is near and dear to my heart: money. Salespeople are operated, right? We love to generate money. We're coin operated. If we can sell value and make money through it, that's where the profession of sales is such a great thing. Now, let's look at several key performance indicators or KPIs that you as a manager, you as a VP of sales want to be able to actually consider. The first one is sales engagement. So, what is that? Basically, it's the percentage of people that are hitting their quotas and making money. Because if salespeople are not, hitting the minimum number, let's say the minimum is 75% of their quota, they're not going to be able to make any money. This is not an indication that it's not going in a good sense. We want everybody. We're shooting that everybody is hitting 100% sales engagement. Everybody's making money. So if we realize that if we look at our salespeople, that we're going to look at them and we're going to say, how many of them did not make the 75? We're going to look at those number of people and we're going to say, look, what do we need to do to be able to move them into the 90 or the 100% where we actually want them to be? We can also look at how many people only achieve 90% of the quota. And then ask ourselves, how can we get those 90 people, the 90% to 100% quota? Then we look at the people who's hitting the 100% or 100 plus percentage of the quotas, and how can we increase that, right? So we're going to have what we call a distribution. We want to be able to make sure that those people that are not hitting the 100% or are hitting maybe at 75 or 90, our job as a VP of sales, as a manager of sales, is to be able to give them the right training, the right guidance, help them with the key account planning to make sure that they're hitting their numbers. So again, this is something you need to consider when you look at your data. Look at last year's numbers and ask yourselves and see how many people actually made it to 100%. Look at how many people did not make 100%. Then look at what the difference is, right? What can be done to be able to move them from one to a higher number, right? The big rule here is that how many people did or did not make it to at least 100%. That's what you want to be able to know. And for those people who do not make it there, we need to do some actions, whether train them, give them information that they need to do, or get rid of them. Okay? So, another key performance indicator that you may want to consider is product mix. Because one of the goals that you may want to give each salesperson is that, hey, we need you to sell a specific amount of each one of these products. So let's look at other numbers that we looked at earlier today, right? So I want to talk to my salesperson. I'm going to say, hey, I need you to sell 30% of your sales needs to come from the X1000. 60% of your sales have to come from the X2000, and at least 10% of your sales should come from the X3000. If you can do that, I have a bonus waiting for you. And that's an incentive for salespeople to sell across all products from the X1000 to the X3000 or whatever you add into there. That's a good thing to incentivize your salesperson, not just on one product, but all the products. Another you should look into is marginal analysis. Maybe for each of the products you're selling, the X1000, the 2000, the 3000, or whatever, you want them to hit a certain margin, or your company has to hit a certain margin to be able to make the money. Let's say that you analyze sales, that you look at the cost of selling, the cost of things being sold, and you realize that for us to be able to make money for the company, we cannot discount the products. We have to hold the line on the pricing. So then you look at the salesperson, right? And you look at them, and what you can do is you can do a modular analysis on what they sold, how much they sold it for, and then find out what the margin is for each product line. So for example, for the X1000, right, we can say, hey, we need you to maintain a margin of at least 15% profit margin in order for us to be able to make money. Then I can say for the X2000, I need you to maintain at least 20% profit margin. And on the X3000, I need 25% profit margin. You have to sit down with your chief financial officers for this and to figure this out. But again, it's really basics. You don't want salespeople really discounting the price, because the more that they discount the products, the price, guess what? The more they actually have to sell. And if you're actually trying to go for volume, that always drives up the variable costs. So again, keep in mind that the less we discount, the less we have to sell, the more we can maintain a margin analysis. So at the end of the year, you can tell a salesperson, hey, if you can hold the line on pricing, not give it away, not discount it, then your margins are within these parameters. Guess what? There's another bonus waiting just for you. Again, salespeople love these stuff. They love these bonuses. Last but not least, new client acquisition could be another key performance indicator, which is pretty much we want to acquire new clients if we want to be able to expand our market share. So maybe you can give them goals or objectives. For example, for the X1000, we need you to be able to at least acquire 20 new clients that have bought that product or that will buy that product. And for the X3000 or the X2000, if you can get 30 new clients, that'd be great. For the X3000, if you can bring on board 10 new clients this year, guess what? If you can hit that trifecta, we'll give you another bonus structure on top of that. So when you actually play with sales incentive programs, there are so many ways that you can actually do this. You're going to have fun doing this, but you have to find the right type of combination to be able to make it challenging yet achievable. You don't want to give a goal that is so out there that they cannot actually get it. They may psych themselves out in the beginning, or they may psych themselves into saying that I'm never going to make that. So you want to be able to make a reasonable and intelligent setup, right? So our goal as managers is we need to be able to find the right balance, okay? So now that we've talked about KPIs, which of these KPIs that I shared with you guys is something that you guys want to actually have in your company? Or maybe you might actually want every single one of these KPIs. Also understand that each area of business is different. So like for example, in sales for products, it's going to be different on what the laws are for that. It's also different on the sales if you're selling something pharmaceutical, right? Or if you're selling, pretty much home health services. There are a lot of different guidelines. But so we always want to be able to make sure that, depending on what our bonus structures are, we should actually also understand what the laws are in our particular area. So let's go ahead and move on to the last part of this video series, where we're going to summarize everything up for you guys at this moment. So just keep on watching. Thank you for actually pushing through to watch this video series right here.